The dollar liquidity infrastructure for global commerce.
Hi, I'm Bobola Odebi. Welcome to my digital money series where I break down blockchain, crypto, stablecoins, and global payments in simple English so anyone can understand them. Every government wants the same things: more businesses, more investments, more exports, more jobs, more economic growth. But very people understand how money actually moves. Because if businesses can't move money efficiently, trade slows down, investment slows down, governments collect revenue more slowly, and economies become less competitive. After spending years building um, cross-border payment solutions, one thing became very clear to me. Countries don't just compete with natural resources anymore. They compete with infrastructure, not just roads, ports, electricity, but financial infrastructure. That's why governments around the world are investing billions to modernize it. Not because it's the thing of now, but because competitiveness depends on it. When most people hear infrastructure, they just automatically think about roads, airports, railways, electricity, ports. And yes, those are important infrastructures. But there is another type of infrastructure we really talk about: the financial infrastructure. It's the invisible system that allows an economy to function. It includes payment systems, banking networks, capital markets, settlement systems, credit bureaus, digital identity, cybersecurity, even the laws and regulations that make people trust the financial system. You don't usually see it, but every salary, every tax payment, every international trade transaction, every investment depends on it. Without a good financial infrastructure, even strong economies can slow down. When you look around the world, an example is Estonia. They digitized almost every government service. Citizens can register businesses online, access healthcare, pay taxes, even vote, because to them, digital identity became national infrastructure. India built UPI, and today billions of payments move instantly every month. Brazil built Pix. Nigeria built NIBS instant payments, which is one of the fastest domestic payment systems anywhere in the world. So different countries, different technologies, but exactly the same objective: build infrastructure that makes the economy work better. Now, here's what's interesting. Most countries have done a great job improving their domestic payment systems. But once money crosses borders, everything changes. Imagine Nigeria exports crude oil, or Ghana that exports cocoa, Chile exports copper, Indonesia exports palm oil, Brazil exports soybeans. Those products are sold around the world. Almost all are priced in US dollars. But here is something most people never think about. The exporting country usually don't control the infrastructure that moves those dollar payments. Funds travel through correspondent banks, compliance reviews, intermediaries, different jurisdictions. Every step adds time and costs. Sometimes payments takes days. Most times, businesses lose thousands, if not millions in dollars in fees and foreign exchange rates. Sometimes governments even wait longer before they receive commodity export revenues. The challenge isn't the trade, the challenge is the infrastructure that moves money globally. Now, it's important to understand something. Correspondent banking wasn't a mistake. It solved a real problem decades ago. There was no internet, no blockchain, no instant communication. And banks needed trusted relationships to move money across countries. So it worked perfectly well for the longest. And it helped build the modern global trade. But trade has evolved much faster and more globally than payment infrastructure. It's a bit like using yesterday's postal systems for today's digital economy. The world has changed, but the infrastructure has not changed as quickly. This is where technologies like blockchain begin to matter. Not because government wants everyone to trade cryptocurrencies. That's not the point. Blockchain creates a new settlement system. Stablecoins introduce digital money, digital dollars that move 24 hours a day, 365 days a year. Artificial intelligence improves fraud detection. Digital identity strengthens trust. Cybersecurity protects the system. So when you combine all of these together, they modernize the financial infrastructure. It's not replacing banks or governments or the central bank of a country. It's making entire system more efficient. And this is why governments everywhere are paying attention. For example, the United States passed the Genius Act and introduced payment stablecoin regulation. Europe implemented MiCA. The United Kingdom is developing stablecoin regulations as we speak. Nigeria recently launched the new payment system vision 2028 and mentioned blockchain technology, AI, as part of the technologies that they want to use to achieve this vision. So countries around the world, across Africa, are also expanding PAPS, which is the Pan-African Payment System. Central banks are exploring digital settlement. So if you notice that the conversation has changed from should we allow blockchain, it's now how do we securely implement it? And that's a very different conversation from a few years ago. So for me, I don't believe the world's biggest challenge right now is technology, because the technology is already here. Blockchain works, digital wallets works, artificial intelligence is here and it works. The challenge now is understanding how these technologies fit together and building trusted infrastructure that governments, banks, businesses, and citizens can confidently use. Technology alone doesn't modernize economies. Education, partnerships, and implementation do. And this is why I'm creating this series, not to convince anyone to buy or invest in cryptocurrency, but to help government, policymakers, banks, investors, businesses, and global citizens to understand how the financial infrastructure is changing. Money is changing from what we know it to be today. And once you understand that, you begin to understand where the world is going. And so in the next episode, we'll look at how cross-border payments remain one of the biggest bottlenecks for global trade, global commerce. And when you hear global commerce, it's not just businesses, doing business across borders. It's also gig workers, people providing services directly to companies, businesses in another country. And also understanding how countries are going about solving it. So if you are involved in government, banking, policy, or international trade, I would love to hear from you. What do you think is the biggest financial infrastructure challenge your country faces today? Leave it in the comment section or reach out to me directly. And if this helped you see the bigger picture, share with someone else.
The dollar liquidity infrastructure for global commerce.